Good day to one and all, and welcome to the weekly market update provided by SC Securities Research. As always, we will be taking you over the weekly highlights pertaining to the stock market before delving into some news regarding the macroeconomic outlook for Sri Lanka, or some of the major headlines in that space for the week. And then afterwards, we'll look at some of the key highlights for the secondary market before delving into the global commodity market and some global market news. So without further ado, let's head into the major stock market news highlights. So as the headline reads, Twin Peaks, local investors propel CSE to multiple all-time highs. So this week, we actually saw a huge uptick in the Allshare and the S&P. So if we look at just the ASPI for this week, it rose by 1.86%, whilst the S&P rose by 3.61%. We saw, compared to last week, where there was a lull in turnover, we can definitely see that this week there was a huge increase in that, more than doubling in most instances. So Monday, we saw really the bullish run really kick in, with the Allshare increasing by 329 points. This was mainly led by HNI interest, or high net worth interest, in momentum driven stocks. And it was your basic, not basic, it was your normal counters that actually witnessed such traction. So Expo, JKH and LOLC, as well as commercial leasing, that garnered most of the attention. This, as it has been in previous weeks, the demand has been driven up by local investors. And they were very bullish on Monday. And this actually led to some of the foreign investors exiting, with the continued foreign outflow amounting to 722 million just on Monday. So for the week, it came in at 1.56 billion. Tuesday actually saw the momentum continue, with the Bourse hitting its first all-time high for the week of 9,339. Again, we saw heavy traction in index-heavy counters such as Expo, LOLC, and commercial leasing. We also saw some retail interest in Galadari Hotels and Lankaorix Finance. Wednesday, again, we continued the bullish momentum, with the Allshare actually crossing the 9,400 mark, up by 94 points. Again, driven by your normal counters that we have seen. Thursday saw the continuous record-breaking momentum, as the Bourse actually closed at 9,460. And actually the recent star performer, which has been Expo, touched a new high of 202 before retracing back to 198 levels. Friday saw the only blight, or the only black mark, as it were, in otherwise what was a phenomenal week for the Allshare. The Allshare actually retraced and fell by 17.6 points. So it was a marginal decline that can be attributed to some form of profit taking place. And as we stated last week, we did say that the market had consolidated and that it would push up. And we actually thought that it might retrace after hitting the 9,100 levels, but that was not the case. Moving forward, we do expect the Bourse to retrace in some portion, as some form of profit taking will take place. So Monday, there might be some profit taking, but we might see the bullish momentum continue and offset whatever profit taking functions that take place. We do maintain that with international borders opening, that some hotel stocks could see some positive traction moving forward. In terms of the economic news for the week, we stayed with port side. So that being with the landmark venture for JKH. So Sri Lanka actually sealed its biggest ever investment into the port sector. So the deal was worth around 650 million US dollars. And it was a joint project with promoters being Indian giant Adani and local participants JKH and state-owned Sri Lankan Ports Authority signing the build, own and transfer deal for the Colombo West International Terminal. The deal struck is for a period of 35 years and will see a brand new deep water terminal with a quay length of 1,400 meters. And will also bring in an annual handling capacity of 3.2 million TEUs. I think currently the current capacity is around 3.4. So this will bring in another further 3.2 million in terms of TEU capacity, handling capacity. The construction is set to commence in early 2022, with operations expected in another 2 years. However, the full terminal to be completed will take 4 years from now. JKH will have a 34% stake in the West Terminal, and this could be attributed to this news could be actually attributed to the recent rise in stock price. For JKH, this is their second venture or second foray into this space following their successful implementation in the South Asian Gateway Terminal. Moving on from that, we also touch upon the fact that industry experts fear a loss of 40% in the tea crop for 2022, and that is on the back of the chemical fertilizer ban being implemented by the government. Now, this has been actually cited by foreign press as well. And what they all seem to state is that despite this being very much a very good initiative and a very green initiative moving down the line, and which is seen as on a very positive note, the implementation of this policy has been somewhat flawed. So a lot of industry experts have stated that not only tea, but even rice crop might lose somewhere in the region of 30 to 40% in the coming year. And that is mainly because of the fact that green crops are much more labor intensive and also generally yield a lower amount. So we might actually see a knock-on effect from this, being that inflationary pressures will rise as the local supply will diminish. The norm will be for the price of that commodity, in this case, food, to actually rise on the back of a lower supply. Furthermore, what this also puts into perspective is that the government will actually have to spend more forex earnings or more of their forex reserve, I beg your pardon, to actually import more rice and tea crop into the country to meet local demand. So despite this being somewhat of a very good initiative, the implementation remains flawed, and maybe what they need to look to is the implementation process that they employed to the palm oil cultivation, where they gave a target of reducing palm oil cultivation all the way down to 0%, but reducing it by 10% every year and replacing it with the crop. So that might be a better way to actually go about this venture rather than trying to reduce it to 0% in one go. There very well may be knock-on effects from this initiative. And moving to the secondary market, we touch upon the fact that there is still upward movement continuing. Sri Lankan Treasury yields rose again this week with a bond auction that was held on the 29th of September. This was again another auction that was held without the yield controls that were in place since March 2020 last year. The three-month yield, rose by 32 basis points, whilst the 6-month yield rose by 72 basis points. So all these yields actually increasing leads to the conclusion that the central bank will again have to increase their policy rate somewhere down the line. So this too is putting an upward or pushing pressure on the central bank to actually revise upwards its policy rates. And moving on to the global commodity counters, this week there is only one news highlight that we actually need to look into. That is the main one, and this actually, Brent oil is also our commodity watch. So Harin will take you over the technicals pertaining to that in a short while. So the headline reads, "To infinity and beyond." Oil prices actually continued to rise this week, and though it did retrace towards the end of the week, the count actually hit a 3-year high of $80 per barrel. This was not seen since May 2018, if I'm not mistaken. And this actually leads to our global market news as well, with it actually having a ripple effect on global markets as investors feared a rise in a potential energy crunch that is likely to weigh in on any global recovery effort. All eyes actually will be on OPEC plus. So the supplying bloc is actually scheduled to meet on Monday. And the bloc has already committed to raising their output by 400,000 barrels by next week. But this meeting also comes on the back of the fact that 2 days ago, the Federal Reserve actually met with certain individuals in the supplying bloc with the hopes to actually increase potential supply. The supply has been significantly hit by the fact that there were unforeseen hurricanes that actually hit the US coastline, especially the Gulf of Mexico, which is a huge supply block in a global context. And also that coupled with the fact that a lot of oil investors were actually hoping that sanctions against Iran would be lifted by this time this year. However, it now looks very much like these sanctions by the US will not be lifted anytime soon. So that also puts a further burden on the supply chain. And looking at other commodity counters, we actually saw a significant fall in aluminium prices, which is a break from the usual streak that we have seen this year on the commodity counter. That can actually be attributable to a rising dollar coupled with demand fading slightly due to fears of recovery slowdowns. And finally, on a global market context, markets actually slide on inflation fears. So inflation contagion actually took place. Asian markets ended the week in red following a dip on Wall Street on Thursday, as sentiment soured amidst growing worries that inflation may persist after global growth has peaked. So the Nikkei actually ended 2.31% down on Friday, whilst the Hang Seng dropped marginally by 0.36%. This was actually a knock-on effect. So as European markets opened today, they too posted losses. So the Pan-European Stock 600 fell by 0.7% in mid-morning trading on Friday. Furthermore, we expect European stocks to end up in the red today as Eurozone inflation rose to a 13-year high, driven by steep fuel costs. So in terms of the fuel costs segment, I'm sure a lot of you have seen that in the UK, we have seen a dry up in fuel supplies as well as a dry up in gas supplies. So in some parts of the UK, they don't even have fuel supplies to give to the general public, whilst last week we saw 5 medium-sized gas suppliers go bust and 800,000 people losing their jobs overnight. And going back to the Eurozone inflation statistics, consumer prices in 19 of the member countries had witnessed a 3.4% surge that actually shared the euro. And this is a move that will likely put additional pressure on the European Central Bank to actually increase its policy rates as well. So we need to keep an eye on that moving down the line. US futures, moving into the US markets, US futures pointed to opening losses on Wall Street for Friday, with early pre-market trading after the S&P 500 suffered its worst month since March 2020. The US sell-off that occurred on Wednesday and Thursday can actually be attributed to the fact that investors are bracing for the Fed to wind down its stimulus package amidst mounting fears in slowdown of economic growth, coupled with inflationary pressures, supply chain bottlenecks, and a global energy crunch. Furthermore, the House will meet today, and it is likely that despite President Biden's initial stimulus package, there are rumors and murmurs that that stimulus package might actually be cut in half. So that might actually even signify a bigger fall in US markets, I beg your pardon, which might actually lead to Asian and European markets falling further on Monday. That actually wraps up the news for this week. I will now hand it over to Harin, who will take you over the commodity watch for this week. As I stated, Brent oil, followed by the notions on the ASPI, and our pick of the week for this week, RCL. Over to you, Harin.
Thank you very much, Nuwan. So as we look at from daily chart on Brent crude oil, we can clearly see that the price is actually getting rejected over the zone of daily resistance 77.5, 78.5 per barrel. So we somewhat had a false breakout over the region of 80, and then now the price is actually trading at the daily resistance level still. And if the price manages to make it a support level, if the price manages to bounce back from this key daily resistance, it would initially be a support level. So far we still don't have clear reversal pattern. And also looking at the daily RSI, it comes to a level of 61.84, which is still in the mid-range. So looking at moving averages as well, we can clearly see that the price is actually trading above 18 and 8 EMA level still, and still there seems to be a bullish momentum since the price is trading above both the EMA levels, and we do have somewhat around a higher high formations, higher low formations, higher high formations, higher low formations. So so I would like to add the Fibonacci level to just get an idea where there could be further retracement levels. So even if the price comes below the daily resistance level 77.5, 78.5, where the last traded price is 77.82. So if it comes below further, we can clearly expect certain levels, which is 50% in the Fibo retracement tool, and 61.8%. So in between 76 and 77, there could be somewhat around a retracement again. And if the price actually manages to retrace from that area, we'll be able to expect it further going above the key level of 80. So in order to go to that key level, it needs to break the current high, which is recorded on 28 September, which is basically 80.72. So it needs to break that high in order to reach that key area of 82.7, and then further we'll be able to expect the daily resistance of 85, 86. So this could potentially be a higher low formation. So if the next daily candle appears a reversal pattern, then definitely this daily resistance level would be initially a daily support level where the price would reach 80.72, the previous high, which was recorded on 28 September, and breaking that high will be able to expect the next key levels, which is from the Fibonacci level, which is minus 27, which is 82.7, and also the daily resistance level 85, 86. So we can clearly see how this bullish momentum has been carrying out for the past few weeks, where price was actually trading somewhat around consolidating in between the price of 70 and 73, and we had a clear breakout from the descending channel, and the price made a retest over the channel, and then price managed to reach the daily resistance, and somewhat around we had a false breakout at the level of 80, and now it's actually trading near the daily resistance 77.78.5. So hopefully if a reversal pattern occurs in the next coming days, probably next week, when it comes to if it comes to a reversal pattern, then we'll be able to expect probably a bullish reversal pattern. Then we'll be able to expect it further going upwards towards the daily resistance 85, 86. So worst case scenario, if the price actually fails to retain at this level, daily resistance level 77.5, 78.5, then it would come down again to touch certain levels like 76, 77, and further to the previous one of the key levels where the price was actually consolidating, and we had a breakout. That level was 73.5. That level could be expected as well. So moving ahead with our Allshare Index. So what we can clearly see in the Allshare Index has like one. So I'll be switching on to the 4-hour chart just to show that how there was inverted head and shoulders pattern, and how a breakout from that inverted head and shoulders pattern occurred. So previously, like in the last week also, like we mentioned, we had a left shoulder, we had a right shoulder, we had a head formation over here, and the neckline became the 9,000, 9,050. So index managed to break that previous resistance of 9,000, 9,050, and now it is at a new key area of resistance 9,450, 9,500. So looking at from the daily chart, we can see somewhat around rejections are coming at the level of daily resistance 9,450, 9,500, where 9,500 being the psychological area again. And also for the week, RSI closed at 67.83. So if I draw the Fibonacci from the current high to the low, where the price actually, where the index actually got reversed, so we can clearly see where 61.8% and 0.5%, which is 50% and 61.8% comes. So if the index gets rejected from any of these key, from this daily resistance of 9,450 to 9,500 in the coming week, the continuous rejection could lead the index to this a Fibonacci level of 50% and 61.8%, which would be basically between 9,100 and 9,200. So basically, if the index manages to break the daily resistance 9,450, 9,500 and close above 9,500 in the coming week, then definitely we'll be able to see it making new highs, also reaching the daily resistance of 9,950 and 10,000. So that would be a huge bullish momentum there. But before reaching that key level, there could be certain higher low formations and reversal patterns. So this could basically happen, since even when we look at from the daily chart, we can clearly see that there was a rejection on 28th, there was a rejection on 30th, and today also we were able to see how the index made a high of 9,523.99 and closed at 9,442. So looking at the moving averages, of course, we can clearly see still the moving averages are actually, the index is trading above the moving averages, and there's somewhat around the gap there in between the moving averages and also the index. So therefore, continuous rejection from this daily resistance could lead to touch the 8 moving average at first, 8 moving average, which is at 9,250 and which is somewhat near the 61.8% Fibonacci level. So that could be tested as well in order to make a new higher low formation. So we can clearly see how there is a higher high formation right now, but a higher low formation is missing at the moment. So rejection from this daily resistance could bring down the index to make a higher low formation. Else, if the index manages to return over the daily resistance level, if the enough volumes comes in and enough liquidity comes in, we'll be able to expect it further going up to the daily resistance of 9,950, 10,000, and sustaining above the level of 9,450, 9,500, and initially making it a daily support level. So looking at our pick of the week, which is RCL. So RCL, we had certain higher high formations, higher low formations, higher high, higher low formations, and also a high on September 2nd, which is 49.8, where it actually got rejected from the resistance level of 50.51 and failed to touch the level of 50 by 2 cents. So it is currently trading in between the support level of 45.46, where the last trading price is 45.5. And looking at the RSI, it is in the mid range, and still it is in the mid range, and it closed at 59.44 for the week. So at the moment, what we can clearly see is there's not much of a reversal pattern over here, but since it is somewhat around trading near the support level, if there's a bullish reversal pattern in the next upcoming week, we'll be able to expect RCL moving up towards the resistance level of 50.51. So that would be, here we can clearly see how the previous resistance of 45.46 has been broken, and there's a higher high formation over here, and this could be probably a higher low formation where the price is actually trading now at 45.5 and at the between the support level of 45.46. So that could be initially high low formation, and if it is a high low formation, and if there's a bullish reversal pattern in the coming week, we'll be able to expect breaking 29th high, which is 47, and price moving towards the key area of daily resistance 50.51. So that's it. Thank you. Over to you, Nuwan.
Thanks, Harin. And as always, you can get this weekly report as we send it across to our client list on our client mail. And you can also see this report on our LinkedIn platform. Furthermore, this week, before we actually wrap up, I wanted to turn your attention to that we will be hosting a webinar this week, a bumpy road ahead. So we will be looking at the COVID ramifications, and as they begin to well and truly set in, what can Sri Lanka do to bring about a recovery? So the panel will include myself and Charita, our head of research, and as we take you over the major highlights pertaining to the Lankan economy. The registration link is all here, and we will be putting this link on our YouTube video as well. So the link will be found in the description below. So please, if you do find this interesting and want to have a gander and listen, by all means do sign up. And we do also have a Facebook live stream going online at that time. So the date is the 4th of October, that's next Monday at 3:30 p.m. And don't forget to give us a like and share and subscribe across our social media platforms. I beg your pardon. We do keep inundating them with all the latest content. And as always, we look forward to having you again next week and hopefully seeing you all on Monday. So till then, have a pleasant weekend, everyone, and take care.